Have you ever noticed how rarely you use physical cash these days? You tap your card, scan a QR code, or use your phone to pay for almost everything. It feels like cash is slowly disappearing. But what if I told you the biggest change is yet to come? And it's not from a tech giant or a startup, but from the very institutions that print the money in your wallet, central banks. Get ready, because we're diving into the world of central bank digital currencies, or CBDCs. Could this be the final chapter for cash as we know it? So, what exactly is a CBDC? Think of it as a digital version of the cash in your pocket. Right now, most of the digital money, we use the numbers in our bank accounts as commercial bank money. It's a liability of your bank. When you pay with your debit card, your bank is settling the transaction with the merchant's bank. A CBDC would be different. It would be a direct claim on the central bank, just like physical cash. It's like having an account directly with the Federal Reserve or the Bank of England. This is a huge deal, and it could fundamentally change how we think about and use money. Why are central banks even looking into this? Well, there are a few big reasons. First, cash usage is declining fast. As we go more digital, central banks risk losing their direct connection to the public. A CBDC would maintain that link in a digital world. Second, it's about efficiency and innovation. CBDCs could make payments faster, cheaper, and more secure, especially for cross-border transactions which are currently slow and expensive. Imagine sending money to another country instantly, with almost no fees. Third, it's about financial inclusion. Billions of people around the world don't have access to traditional banking services. A simple, accessible digital currency could bring them into the formal economy. And finally, governments see it as a way to improve the implementation of monetary policy and distribute stimulus payments. Like we saw during the pandemic, directly and instantly to citizens. Okay, so this all sounds pretty good, right? Faster payments, more inclusion, better government services. But hold on, because there's a flip side, and it's a big one: privacy. Physical cash is anonymous. When you buy a coffee with a $5 bill, no one knows but you and the barista. There's no digital trail. A CBDC, however, would be programmable and traceable. Every single transaction could potentially be recorded on a central ledger. This raises major questions. Who gets to see this data? The government? The central bank? How would this information be used? Supporters say it could help fight money laundering, tax evasion, and other illegal activities. But critics worry it could lead to unprecedented levels of financial surveillance. Your entire spending history could be an open book. Let's think about what programmable money really means. It's not just about tracking, it means the money itself could have rules attached to it. For example, a government could issue stimulus funds that can only be spent on certain things, like groceries or utilities. Or they could set an expiration date on the money to encourage spending and stimulate the economy. Imagine receiving a digital payment that disappears if you don't use it within a month. On one hand, this gives policymakers powerful new tools. On the other hand, it represents a significant loss of personal freedom and control over your own money. Where do we draw the line between public good and individual autonomy? Another major concern is the impact on the commercial banking system. If everyone can hold their money directly with the central bank in a super safe CBDC, why would they keep large deposits in commercial banks? This could lead to a massive outflow of funds from banks, especially during a financial crisis. People might rush to move their money from their bank account to their CBDC wallet, creating a digital bank run. This could destabilize the entire banking sector, which relies on deposits to lend money and fuel the economy. Central banks are aware of this risk and are exploring solutions like putting a cap on how much CBDC an individual can hold, but it remains a huge challenge. So, are we seeing the end of cash? It's not a simple yes or no. Many countries developing CBDCs, like China with its digital yuan, have stated they plan to keep cash in circulation alongside the digital version. They see it as offering more choice, not less. However, the convenience and features of a CBDC could naturally lead to cash becoming obsolete over time. Why carry a bulky wallet when your phone can do everything? The transition might not be a forceful ban, but a slow fade into irrelevance. The real question isn't just about cash disappearing, but what we might lose with it. Privacy, autonomy, and a financial system that is entirely dependent on digital infrastructure that could be vulnerable to cyber attacks or power outages. The development of CBDCs is a global race. Over 130 countries, representing 98% of the global economy, are exploring them. China is leading the charge with its large-scale pilot of the eCNY. The European Central Bank is moving forward with its digital euro project. The US is a bit more cautious, still in the research phase, with its Project Hamilton. Each country is taking a different approach, weighing the potential benefits against the significant risks. What's clear is that this isn't some far-off futuristic concept anymore. The future of money is being designed right now, and the decisions made in the next few years will shape our financial lives for decades to come. So, what's the verdict? Are CBDCs a brilliant innovation that will make our financial system more efficient and inclusive? Or are they a Trojan horse for financial surveillance and government control? The truth is, they could be either. It all depends on the design choices we make. Will they be built with privacy as a core feature? Will there be limits on government control? Will we ensure that our financial system remains resilient and that those who prefer or need cash are not left behind? These are the conversations we need to be having right now. This isn't just a topic for economists and bankers. It affects every single one of us. The journey toward a digital currency is complex and filled with potential and peril. It promises a world of instant, seamless transactions, but it also raises profound questions about our fundamental rights. As this technology develops, it's crucial that we all stay informed and engage in the debate. What do you think? Are you excited about the prospect of a CBDC, or are the privacy concerns too great? Let me know your thoughts in the comments below. The future of money is in our hands, whether it's digital or physical. Thanks for watching, and if you found this breakdown helpful, don't forget to like this video and subscribe for more deep dives into the technologies shaping our world. See you in the next one.